Welcome back to Rekt Radio, the only show that looks at a six-figure Bitcoin and says, that's a nice start. I'm Sunny, and folks, the future is unfolding even faster than we imagined. The energy is off the charts.
And I'm Cole, here to remind you that when the energy is this high, it's usually because the whole thing is doused in gasoline and someone is walking around with a lit match. Let's try to decipher the mania before the inevitable explosion.
You call it mania, I call it the Great Arrival. Let's start with the undisputed king. Bitcoin isn't just knocking on the door of the global financial system anymore. It's kicked the door off its hinges and is redecorating the living room. It's holding strong above $117,000, Cole. $117,000. And it's doing this in the face of persistent inflation fears. This is the thesis, playing out in real time.
It's holding. That's the key word you just used. It's not soaring. It's not ripping higher. It's clinging to a number. What are the risks right now? The risk is that this isn't a shrug of strength. It's a sign of exhaustion. The digital gold narrative says that in the face of inflation, Bitcoin should be absorbing capital like a black hole. Instead, it's just treading water at a very high altitude. That tells me the buyers are getting tired.
Tired? They're consolidating. This is what maturity looks like. What could this become? It becomes the bedrock of a new financial era. We're not in the wild, volatile pumps of the old days. We're now seeing Bitcoin behave like a true global macro asset. It has absorbed the inflation fears and is establishing a new, higher floor. This isn't a ceiling, Cole. It's the new foundation that the next phase of the bull market will be built upon. Corporations and institutions look at this stability and see a reliable store of value, not a speculative gamble.
You see stability. I see a precarious balancing act. The entire global market is walking on a tightrope, and you're celebrating the fact that Bitcoin hasn't fallen off yet. When an asset gets this big, it becomes correlated. A major downturn in the S&P 500 or a credit crisis won't just be a footnote for Bitcoin anymore. It'll be an anchor that drags it down. Calling this a safe haven is premature. It's a risk asset wearing a Halloween costume of digital gold. And at this price, the temptation for early investors and whales to take profit is absolutely massive. This isn't a floor, it's a distribution platform for sellers.
I think the sellers are going to be sorely disappointed when they see the next leg up. But while Bitcoin is maturing, the next generation is absolutely sprinting. Let's talk about the platform wars, because we have some serious ATH action. BNB just smashed through to a new all-time high of $864.
Ah, yes, the token for the world's biggest crypto casino run by a single centralized entity that has been in the crosshairs of every major regulator on the planet. This isn't a victory for decentralization, Sonny. It's a victory for convenience. People use the Binance ecosystem because it's easy, not because it's robust. That makes BNB's price a massive single point of failure. One bad headline, one regulatory action, and that all-time high could be a very distant memory.
You see a single point of failure. I see a finely tuned engine of innovation. That $864 price tag isn't just speculation, it's a reflection of immense utility. The Binance Smart Chain is settling billions in value, their launchpad is a primary venue for new projects, and millions of users interact with that ecosystem every single day. Meanwhile, the so-called king of smart contracts, Ethereum, is consolidating around $4,400. It's strong, yes, but BNB is the one showing the explosive momentum. It proves there's a huge market for a fast, low-cost, user-friendly experience.
It proves that people will trade the entire ethos of crypto for a slightly better user experience. While BNB is hitting new highs, Ethereum is sitting there stuck in the mud, trying to solve problems it created for itself. The bulls might be eyeing a $12,000 price target for ETH, but what are the risks right now? The network is still too expensive for the average user. Layer 2 solutions are confusing and fragment liquidity, and the competition is clearly eating its lunch. Ethereum is a beautiful, decentralized dream that's a nightmare to actually use. while BNB is a centralized, efficient machine that just works. The market is rewarding execution over ideology.
I see it as a healthy, thriving ecosystem with multiple approaches. What could this become? A world where you have different chains for different purposes. Ethereum is building the decentralized, high-security settlement layer for high-value transactions, the future digital nation-state. BNB is catering to the high-frequency, low-cost applications. Both can succeed. The fact that both are trading at these incredible valuations shows the sheer scale of the demand. It's not a zero-sum game.
It feels like a zero-sum game for the user's attention and capital. And right now, the easy centralized solution is winning the sprint. My fear is that by the time the beautiful, decentralized solution gets its act together, the race will already be over. But speaking of races being over, we have to talk about the comeback kid of the century.
It's not a comeback, it's a coronation. The Ripple SEC settlement is in the rearview mirror, and XRP is holding strong at over $3. $3! This is monumental. For years, this asset has been weighed down by regulatory uncertainty. That cloud is gone. This is the ultimate vindication for everyone who held on and believed in the vision. The pathway to mass adoption by banks and financial institutions is finally clear.
A pathway is not an arrival. Okay, the lawsuit is over. Congratulations. Now what? The price has pumped on the good news, creating a euphoric high. What happens next week, next month, when people realize that banks aren't just going to suddenly flip a switch and start using XRP for global settlement? The fundamental questions about its technology, its use case, and its centralized nature are all still there. The only thing that has changed is one legal headache is gone. This feels like a classic buy the rumor, sell the news event that's just waiting to roll over.
You call it a rumor cell, I call it the great arrival. What could this become? It becomes the standard. Major financial players couldn't touch it while it was in a legal gray area. Now it has more regulatory clarity than almost any other asset, including Ethereum. That's a powerful competitive advantage. This isn't about retail hype anymore. This is about unlocking the multi-trillion-dollar cross-border payments industry. That $3 price tag is just the market beginning to price in that colossal potential.
The market is pricing in a fantasy of frictionless adoption. The reality is that integrating with legacy banking systems is a nightmare. It takes years of testing, compliance, and integration. What are the risks right now? The risk is that this $3 valuation is based entirely on a best-case scenario future that is years away if it ever arrives at all. The holders might have won the court battle, but they haven't won the war for actual real-world use. This feels like a victory lap, and after the lap is over, everyone has to go back to the hard work of building a business. I'm not convinced the current price reflects that reality.
Well, I think the reality is that the entire market is waking up. Let's ground this discussion in the data. I've got the one-day technicals for Bitcoin pulled up from TradingView. Let's see what the charts are telling us right now.
Excellent. Let's move away from hopes and dreams and look at the cold, hard numbers. I'm looking at the screen and it's painting a very clear picture of a market that has slammed on the brakes.
I see a market that's building power. Look at the moving averages, Cole. They measure the deep underlying trend of the market. The signal is a strong buy, not just a buy, a strong buy. That's the institutional momentum, the bedrock of this rally. It's telling us the powerful long-term money is still incredibly bullish and accumulating.
You're looking in the rearview mirror. The moving averages are a lagging indicator. They tell you where we've been, not where we're going. Let's look at the dashboard right now. The oscillators, the tools that measure immediate real-time momentum, they're sitting on neutral. There's a huge divergence there. The past trend is strong, but the present energy has completely vanished. The engine has stalled, Sonny.
It's not a stall, it's a pit stop. This is the most bullish combination you could ask for. A strong buy on the long-term trend with neutral momentum means the market is consolidating its gains and building energy on a high plateau. It's a coiled spring. The underlying strength is confirmed, and it's just waiting for the next catalyst to send it flying. This is the definition of a healthy pause in a roaring bull market.
It's the definition of a bull trap. It lures in the optimist looking at the past while the real-time picture is screaming that the buyers are exhausted. The market has no energy to push higher, and the best the bulls can do is hold the line. That's not a launch pad, Sonny. The overall summary from TradingView is just a buy, not a strong buy, because the neutral oscillators are dragging that conviction down. It's a stalemate right at the edge of a cliff.
That's all for this episode of Rekt Radio. I'll be back to watch that stalemate resolve into a checkmate against the bears. Stay bullish.
And I'll be back to say I told you so when this pause turns into a plunge. Don't get trapped by a pretty view from a great height. You've been listening to Rekt Radio.